Welcome to the Deep Dive. Today we're taking a deep dive into Bitcoin. It's a topic that's just been everywhere, hitting new all-time highs, sparking conversations.
It really has been hard to ignore.
Yeah. So our mission today is to, cut through some of that noise. We want to help you understand the key takeaways from a bunch of different sources.
We'll be looking at what's driving this latest surge, digging into what makes Bitcoin so unique, but also the challenges it faces.
And we'll definitely explore those historical patterns, especially the halving and what they might suggest about the future.
Exactly. Think of it as getting the essential insights, maybe some surprising facts too, to clarify where Bitcoin stands now and where it might be heading.
Okay, let's jump right in then. Bitcoin's run has been, pretty remarkable, pushing up to fresh all-time highs. What's the absolute latest data telling us?
It's moving incredibly fast. So as of July 10th, 2025, the live price was hovering around $116,563. That's up almost 5% in just 24 hours.
Almost 5% in a day.
Yeah, and get this, it actually set another all-time high, $116,893 on July 11th, literally minutes before some reports came out.
Wow.
And this comes after it broke $112,000 on the 9th, then hit $113,800 on the 10th. Just in the last week, it's up nearly 6%.
That is some serious momentum. And it feels like this isn't just a Bitcoin story, right? The broader crypto market seems to be recovering too.
That's right. The total crypto market cap got back to $3.47 trillion in June. That's a level we hadn't seen since, earlier in June, actually. Still a bit below the absolute peak from December 2024, which was $3.73 trillion, but definitely moving up.
Okay, so the tide is lifting boats. How does the technical analysis, the charts, line up with this price action?
Well, largely it supports this positive momentum. The underlying trends look pretty robust. Investex analysis from July 10th gave Bitcoin an overall positive assessment. High score too, 92.
92, okay. And what about risk? Because these moves sound pretty volatile.
Interestingly, they flagged low liquidity risk and only medium volatility risk, which might seem a bit counterintuitive given the price swings.
Yeah, exactly. Even with these huge gains, the risk isn't flashing red.
Yeah.
Why not? What are they seeing or maybe not seeing?
That's a great question. So in the short term, there's maybe a hint of investor uncertainty, like a horizontal trend channel. But the big thing, the really bullish signal, is that Bitcoin has decisively broken through key resistance levels.
Okay. Like what levels are we talking about?
Well, it pushed through resistance around $107,710, breaking out of what they call a rectangle formation. That technical pattern often signals a continued rise, maybe towards $115,727 or even higher.
Right.
And it also broke through resistance at $109,000. Crucially, that old resistance level is now expected to act as support.
The classic resistance becomes support flip. That's usually a good sign, isn't it?
That's a textbook bullish indicator, yeah.
Yeah.
It suggests the upward momentum has a solid base to build on.
So the charts look promising in the short term. What about, say, the medium to longer term picture?
Medium term looks even stronger, actually. Bitcoin's firmly in a rising trend channel. That signals growing investor optimism, like they're willing to keep buying even as prices go up.
Yeah.
And the RSI, the Relative Strength Index, that's trending up too, which backs up the positive picture. Long term, it's also in a rising channel, consistent buying at higher prices.
And did that analysis give any specific price targets based on these trends?
It did. Based on the price around $111,000 at the time, the alerts pointed to potential short-term targets between $117,000 and $120,000, and longer term, maybe even $145,000 to $162,000. So, yeah, the technicals are definitely painting a positive picture across the board.
Okay, that's the technical side. Let's unpack this a bit more. Beyond just the charts, what are the sort of deeper fundamental forces really pushing Bitcoin higher? What's giving investors this much conviction?
Yeah, this is where it gets really interesting. It seems to be a convergence of several powerful factors. We're seeing changes in investor behavior, but also some major institutional shifts.
Institutional shifts? You mean big money coming in?
Exactly. First off, there's surging institutional demand and huge inflows into those Bitcoin ETFs we talked about earlier. Get this. More than 30% of all circulating Bitcoin is now held by exchanges, ETFs, public companies, even some governments.
30%. That's an all-time high, right?
It is. And it really speaks volumes about how mainstream Bitcoin is becoming. Some consulting firms are even projecting another $120 billion in institutional money coming in before the end of the year.
Wow, $120 billion. How much Bitcoin could that actually buy?
Potentially, it could absorb something like 4 million BTC. A huge amount.
That's staggering. And those U.S. spot Bitcoin ETFs, the ones approved back in January 2024, They've really changed the game, haven't they?
Oh, absolutely. They've made it so much easier for traditional investors to get involved. They've completely transformed how Bitcoin trades. The total trading volume in those ETFs is likely going to cross $1 trillion this month, July 2025.
$1 trillion just in ETF volume.
Yeah. And look at BlackRock's IBIT fund. Just one of them, it's already pulled in over $57 billion in assets. It's become this super easy on-ramp for big blue chip institutions. It's a total game changer.
So it sounds like it's less about, maybe speculative retail frenzy this time and more about these major players stepping in seriously.
That seems to be a big part of the narrative, yes.
And this ties into that idea of Bitcoin as a safe haven, maybe like digital gold. Is that narrative actually taking hold now?
Increasingly, yes. The uptrend we've seen since April seems significantly driven by this growing recognition. We're actually seeing Bitcoin outperform, or at least decouple from, the S&P 500 on days when the stock market is down.
Interesting. So it's acting as a diversifier.
Exactly.
Yeah.
And that status got a boost when the first U.S. state signed a Bitcoin reserve bill into law that came after a federal Bitcoin reserve was established by executive order. These are pretty significant signals of confidence from official channels.
Right. And I remember hearing analysts say this rally feels somehow healthier than past ones. What do they mean by that? Is it more sustainable?
Yeah. Healthier implies it's built more on, quote, real capital flows rather than short-lived speculative leverage. Basically, less risky borrowing, more genuine buying.
Okay.
Apparently, there's been a reset in over-leveraged participants, so the foundation might be stronger this time. We also see supporting evidence for this, like Bitcoin reserves on exchanges steadily declining since late April.
People are moving coins off exchanges, meaning they plan to hold.
That's the common interpretation, yeah. It signals long-term confidence, maybe O-dealing, and it also reduces the immediately available supply, which could contribute to a supply shock down the line if demand keeps up.
So it's not just the price going up on the screens. You can actually see real money flowing in and coins being locked away on the blockchain itself.
Precisely. There's on-chain data for this. These accumulator wallets addresses known for buying and holding, not really selling, they now hold around 248,000 BTC.
And how does that compare to before?
That's a huge jump, like 71% more than just 30 days ago. It's the highest accumulation level we've seen since December 2024, back when Bitcoin was trading around $97,000.
So people are still accumulating heavily, even at these much higher prices.
Exactly. It signals pretty unwavering conviction among those investors. And another technical point, Bitcoin's realized cap went up by $4.4 billion right after the price broke $113,000.
Realized cap. Remind me what that shows.
It basically measures the value of all coins based on the price they last moved at, so it only goes up when coins are actually changing hands at higher prices. It confirms real investment is happening, not just the price being marked up speculatively.
Got it. Okay, so we have strong technicals, massive institutional interest, a growing safe haven narrative, and real on-chain accumulation. What does all this mean for Bitcoin's place in the wider financial world? How unique is this thing, really, and what are the big roadblocks still?
Yeah, that's the crux of it, isn't it? Bitcoin is undoubtedly groundbreaking, but its very nature creates some complex challenges, especially when it bumps up against traditional finance and, global regulations.
Let's rewind a bit then. Remind us of the basics. It started with that white paper, right?
Right. 2008 white paper by the mysterious Satoshi Nakamoto launched January 2009. The whole idea was a peer-to-peer electronic cash system, direct transactions, no banks needed.
And it was the one that really started this whole crypto revolution.
It absolutely was. The first one to actually get used. It inspired literally thousands of other projects, creating this global industry now worth, over $2 trillion.
And wasn't there that famous pizza story?
Yes. Bitcoin Pizza Day, May 22nd, 2010. Someone traded 10,000 Bitcoins for 2 pizzas, the first known commercial transaction.
10,000 Bitcoin. I don't even want to calculate what that's worth today. Those are some expensive pizzas.
Tell me about it. So, key features. Maximum supply capped at 21 million coins. New ones are mined, but the reward for mining gets cut in half roughly every 4 years. That's the halving we'll talk more about.
Okay.
It's secured by a strong cryptographic algorithm, SHA-256. And, as we discussed, it's increasingly seen as a store of value, kind of like digital gold, which is why many people just OCHO-DL hold on for dear life rather than spending it day to day.
So it's built on these core principles, fixed supply and all that. But the tech itself isn't static, right? It evolves. We hear about upgrades, forks.
Definitely. Bitcoin's protocol has been upgraded over time. You get hard forks. Those are radical changes that aren't backward compatible. Bitcoin Cash is probably the most famous example.
Right, creating a whole new version.
Yeah. And then you have soft forks, which are backward compatible. Taproot was a big one recently.
Taproot. What'd that do?
It brought improvements to scalability, efficiency, and privacy. Importantly, it also laid some groundwork for potentially having smart contracts on Bitcoin, maybe even a DeFi ecosystem eventually.
Interesting. And the Lightning Network. That's another key development, isn't it? For making payments faster.
Exactly. Lightning is what's called a layer 2 solution built on top of Bitcoin. It allows for really fast, almost instant, high-volume transactions with very low fees. And they're more private, too. It's crucial for scaling Bitcoin to handle potentially millions of transactions without clogging up the main blockchain.
So it helps address that criticism that Bitcoin is too slow or expensive for small payments.
Precisely. It makes micropayments feasible, making Bitcoin more practical for everyday use cases.
Okay, now, given this unique, decentralized, borderless nature, regulation must be a massive challenge. You mentioned it being called a legal platypus. Why is it so tricky to regulate?
The platypus analogy is pretty apt. Regulation is definitely a major factor impacting price. You see dips when there are government crackdowns, surges when there's positive regulatory news. The core problem is Bitcoin's freewheeling nature. It doesn't respect borders, doesn't have a CEO or headquarters, isn't controlled by any single agency.
So who's in charge of making the rules?
Well, that's the issue. In the US, for instance, there's still confusion. The IRS treats it as property for tax purposes. But the CFTC, the commodities regulator, considers it a commodity.
So different arms of the government view it differently. That sounds messy.
It creates a lot of legal ambiguity, yeah. Interestingly, individual states have sometimes been quicker to act than the federal government, like in New York with its BitLicense framework or Arizona recognizing smart contracts legally.
Huh. And it's not just Bitcoin, right? There are thousands of other tokens, each potentially needing different rules.
Exactly. You've got tokens meant for transactions, utility tokens for accessing services, security tokens representing investments, governance tokens for voting. Some projects try to structure themselves to avoid being classified as securities, which complicates things further.
So it's a global puzzle. What are international bodies doing?
Well, the IMF is calling for more global discussion and cooperation. The EU took a big step with its MiCA regulation markets and crypto assets, which took effect in June 2023. That provides a pretty comprehensive framework for their 28 member countries.
And any recent moves in the U.S.? I heard something about former President Trump.
Yes, there was an order for a working group to draft new crypto regulations and even look into creating a government stockpile of crypto. So it's definitely on the political radar. But bottom line for the US right now, Bitcoin is legal to own and trade, but it's not recognized as legal tender like the dollar.
Despite all these regulatory hurdles, Bitcoin keeps, well, surviving and even thriving.
It does. Historically, it's navigated these challenges through community pressure, innovation, adaptation, and with strong user support, it seems likely to continue doing so.
Okay, another huge topic, energy consumption. This is probably the most frequent criticism leveled against Bitcoin, right? Its environmental impact.
It's definitely a major point of contention. Critics are right that the network uses a lot of energy. One estimate puts a single transaction's usage at 1,173 kilowatt-hours, enough to power a typical U.S. home for 6 weeks.
6 weeks for one transaction. Wow.
Yeah, and the network's total annual usage is estimated to exceed that of entire countries, like Finland. It was these environmental concerns that led Elon Musk and Tesla to stop accepting Bitcoin back in May 2021.
So how do Bitcoin proponents respond to that? What's the counter-argument?
Well, the main arguments revolve around the source of that energy and comparisons to traditional systems. Proponents argue that a significant portion of Bitcoin mining, maybe 40% to 75% by some estimates, already uses renewable energy sources.
Okay, so they're saying it's greener than the headline numbers suggest.
That's part of it. And some argue that mining can actually incentivize the build-out of new renewable energy.
How would that work?
The idea is that miners seek out the absolute cheapest electricity, which is often stranded renewable energy like excess solar or wind power in remote locations that can't easily be transported to the grid. By setting up there, miners provide a buyer for that energy, making those renewable projects more economically viable.
Interesting. Sort of turning a problem into a solution.
That's the argument. They also often compare Bitcoin's energy use to the traditional banking and gold industries, claiming those sectors consume significantly more energy, perhaps twice as much. Plus, they stress that Bitcoin's energy use is relatively transparent and traceable, unlike the complex, often hidden energy costs of the legacy financial system.
Are steps being taken to actively address these concerns?
Yes, definitely. There have been U.S. congressional hearings, industry initiatives like the Crypto Climate Accord aiming for net zero emissions, and the Bitcoin Mining Council, which promotes transparency and sustainable practices. So the debate is ongoing, but there is movement towards greener mining.
And finally, on the characteristics front, there's this growing political dimension. It's not just about tech and finance anymore, is it?
Not at all. It's becoming increasingly political. You have El Salvador making it legal tender back in September 2021, even planning a Bitcoin city powered by geothermal energy from a volcano.
That was a bold move.
Extremely bold. And on the flip side, you have countries like China cracking down heavily on crypto trading and mining. Although, interestingly, even with the crackdown, China apparently remains the second largest source of Bitcoin's global hash rate, the network's processing power.
Really? Even after the ban?
According to some data, yes. It just shows how decentralized and, frankly, difficult to completely eradicate the network is. The U.S. is currently #1 in hash rate.
Okay, let's shift gears to something fundamental to Bitcoin's design.
Yeah.
The halving. We keep hearing this term, especially around price predictions. What exactly is the halving, and why is this event happening roughly every 4 years considered so important?
Right, the halving. This is where it gets really interesting because it's not just some market event, it's baked right into Bitcoin's core code. It's a fundamental mechanism affecting its supply.
Baked into the code.
Yeah.
How does it work?
Okay, so Bitcoin miners, the ones who process transactions and secure the network, they get rewarded with newly created Bitcoin for adding a block of transactions to the blockchain. The halving is an event programmed to happen automatically every 210,000 blocks, which works out to roughly every 4 years, where that reward gets cut exactly in half.
Cut in half. So miners suddenly start earning 50% less new Bitcoin for the same work.
Precisely. It's a pre-scheduled reduction in the rate at which new Bitcoins are generated and enter circulation.
Why build that in? What's the purpose?
It's crucial for controlling Bitcoin's supply. It ensures a predictable, decreasing rate of inflation, making Bitcoin a deflationary asset over the long run. This stands in stark contrast to traditional fiat currencies, like dollars or euros, where central banks can theoretically print more whenever they want.
Right, so it enforces scarcity.
Exactly. Bitcoin has that hard cap of 21 million coins that will ever exist. Each halving event brings us closer to that limit, slowing down the approach. The very last fractions of a Bitcoin are expected to be mined sometime around the year 2140.
2140. So quite a way off. Okay, so the theory is reduce the supply of new coins, and if demand stays the same or increases, the price should go up.
Yeah.
What does history actually show? Does the price react like that after halvings?
Historically, yes, there's a very strong correlation. Bitcoin prices have generally shown significant increases following halving events. It's often described as a supply shock hitting the market.
But is it immediate? Like the day after the halving, the price moons?
Not usually, no. It's typically more of a delayed effect. The price increases often start to materialize maybe 6 to 12 months after the halving event itself. And the really big surges, the new all-time highs, have often occurred between 12 to 18 months post-halving. It's like a fuse gets lit, but it takes time to burn.
Interesting. Can you walk us through the previous ones? What happened after the first halving?
Sure. The first halving was way back in November 2012. Bitcoin's price was around $12 then. In the year or so that followed, it just skyrocketed, eventually peaking near $1,032. That was driven by the supply reduction, but also growing awareness and acceptance back then.
Wow, from $12 to over $1,000. Okay, what about the second one?
The second was in July 2016. The price was around $651 just before it. Again, it didn't happen overnight, but that halving kicked off the next major bull run. Bitcoin eventually reached that famous peak of nearly $20,089 in December 2017. That was about 526 days, so roughly 17 months after the halving.
Right, the 2017 mania. And the third one, May 2020. That seemed to precede the huge run-up in 2021, didn't it?
It absolutely did. Bitcoin was trading around $8,787 at the time of that halving. Within a year, it had blown past $60,000. It eventually peaked around $66,000 and $69,000, depending on the exchange, roughly 18 months later in late 2021.
What made that 2020 halving perhaps different, more impactful? Were there other factors at play then?
Well, that period saw a massive shift in market sentiment. You had growing institutional interest starting even then, plus the whole narrative of Bitcoin as a store of value and inflation hedge really took off, especially with all the central bank money printing happening globally due to the pandemic response. The halving just added fuel to that fire.
Okay, and that brings us to the most recent one, April 2024. The fourth halving. The reward dropped from 6.25 BTC per block to 3.125 BTC. What was unique about this one?
This last halving was definitely unique because it was the first one to happen after the launch of those U.S. spot Bitcoin ETFs. Bitcoin's price was already quite high, around $63,821 on the halving day itself.
So the ETFs had already brought in a lot of demand before the supply shock fully hit.
Exactly. That significant institutional inflow via the ETFs was a new factor this time around. It had already pushed the price up considerably and further cemented that store of value narrative even before the halving supply constraint really started to bite. We might still be in the early phases of seeing its full impact play out according to those historical 12, 18-month timelines.
That makes sense. How do these halvings affect the miners themselves? I mean, their revenue gets cut in half overnight. That must be tough.
It's hugely impactful for miners, yes. It significantly reduces their rewards measured in Bitcoin. For miners with older, less efficient equipment or higher electricity costs, it can suddenly make their operations unprofitable.
So does that lead to miners shutting down?
It can, yeah. You often see a drop in the network's hash rate temporarily after a halving as less efficient miners capitulate. This can lead to some consolidation in the mining industry, with larger, more efficient operations potentially gaining market share. It also strongly incentivizes miners to find cheaper energy and adopt more energy-efficient hardware and practices to stay competitive.
So it forces efficiency. Does the halving effect ripple out beyond just Bitcoin's price and the miners? Does it impact the rest of the crypto market?
Oh, definitely. Bitcoin is still the dominant force in the crypto market, kind of like the gravity well. Halving events tend to create a bullish sentiment that lifts the entire market. Historically, major Bitcoin bull runs triggered by halvings often lead to subsequent rallies in altcoins, sometimes even more explosive ones, often referred to as alt season.
Right.
Trading volumes across the board tend to increase, market activity picks up. The halving is seen as this fundamental positive recalibration for the whole digital asset space, reinforcing the core value proposition of scarcity.
Okay, so looking ahead now, based on everything we've discussed, the current momentum, the institutional flows, the halving cycle potentially still playing out, what are some of the price targets analysts are seriously talking about?
Yeah.
And maybe more importantly, what are the key things someone interested in Bitcoin should keep in mind right now?
Right, connecting all these dots. Well, looking at current on-chain metrics, some analysis suggests this current rally could push towards $130,900 before we see significant profit taking.
$130,900. What's that number based on?
It's linked to something called the MVRV ratio, market value to realized value. Historically, when that ratio hits a certain level, around 2.75, it's often marked the point where longer-term holders start distributing or selling more broadly. So it's seen as a potential area of resistance or consolidation.
Okay, so MVRV is like a signal that the market might be getting a bit overheated in the medium term. Are there even more bullish targets being thrown around?
Oh yeah, some are definitely more bullish. One well-known fund manager, for example, reiterated a $150,000 target based on a long-term technical pattern called a cup and handle breakout.
A cup and handle. Okay, another chart pattern.
Exactly. So key levels people are watching on the upside are that $116,100 area, $120,000 as a psychological level, that $130,900 MVRV zone, and then potentially $150,000 if that pattern target holds.
Those are pretty substantial near to medium term targets. What about the really long-term projections? Are people still talking about those moonshot numbers?
They are. Standard Chartered, the bank, still has a target of $250,000 sometime in 2025. Their argument is that the impact of the spot ETFs on Bitcoin will eventually mirror the long-term positive impact gold ETFs had on the price of gold.
$250,000. And wasn't Cathie Wood from ARK Invest talking even higher numbers?
Yes, ARK Invest has a much longer-term projection. $1.5 million per Bitcoin by 2030. That would imply a compound annual growth rate of nearly 60% from current levels.
$1.5 million by 2030. That's incredibly bold. What's the rationale behind such a massive prediction?
Well, the core argument is that the fundamental setup is just incredibly bullish. They argue the path of least resistance is higher. Why? Because Bitcoin's new supply issuance, its inflation rate, is now below 0.8% per year after this latest halving. That's incredibly scarce.
Lower inflation than gold, even.
Potentially, yes. Meanwhile, demand is expected to keep climbing from those ETFs, potentially from pension funds, sovereign wealth funds down the line, plus growing retail adoption and applications. If those ETF inflows just continued at the average pace we saw in Q1 of this year, around $280 million per day,
Wow.
then the stock-to-flow models, which try to value assets based on scarcity, suggest a price closer to $175,000 by next summer. So you can see how combining sustained demand with shrinking supply leads to these very high targets.
It certainly paints a very optimistic picture. But we know Bitcoin is volatile. It never goes up in a straight line. What are the potential roadblocks, the risks investors absolutely need to keep front of mind, even with all this bullishness?
Absolutely crucial point. Volatility is the name of the game. Regulatory risk is always there. We mentioned the EU's MiCA rules having capital requirements that could impact stablecoins or exchanges. In the US, there are still ongoing debates and proposals about defining more tokens as securities, which could lead to crackdowns.
So regulatory surprises are still a major risk factor.
Definitely. And then there's just normal market corrections. History shows that periods of extreme optimism or leverage often lead to pullbacks. Things like funding rates spiking, meaning lots of people are borrowing to bet on higher prices, or certain option market indicators flipping, or just waning momentum. These have often preceded corrections.
Like warning signs flashing.
Kind of. For instance, when Bitcoin's price gets really stretched far above its moving averages, like its 50-day average, that's sometimes been a signal for a 10-20% drawdown historically. And, of course, unexpected macroeconomic shocks, new tariffs, surprisingly high inflation data, geopolitical events, those could easily trigger rapid sell-offs.
And what about the whales? Those large holders, can they still move the market significantly, especially with the ETFs concentrating liquidity?
Yes, that's still a factor. Because so much trading now happens through these few big ETF channels, a single large holder deciding to sell, say, 10,000 BTC can still have a noticeable impact on the price, at least in the short term. We saw an example back in mid-May where large transfers seemed to trigger a dip down to $99,000 and liquidated hundreds of millions in leveraged bets.
So sudden sell-offs are still possible. How volatile should people expect Bitcoin to be, even at these higher price levels?
Well, that technical analysis we mentioned earlier rated it as medium volatility risk. But historically, even during strong bull markets, 60% annualized volatility is considered pretty normal for Bitcoin. That means daily swings of 5%, even 10% aren't unusual. Sharp drawdowns have followed basically every major parabolic run-up in Bitcoin's history. A big policy shock or, say, mass redemptions from the ETFs could potentially send the price back under $100,000 relatively quickly. So while the long-term trend might look up, the path will likely be very bumpy. Expect the unexpected.
Okay, good dose of realism there. So expect volatility. On the flip side, thinking positively again, what are the key catalysts that could actually help Bitcoin reach some of those higher targets? What could really accelerate the growth?
Several potential catalysts are often mentioned. Renewed easing by central banks like the US Fed, cutting interest rates that usually weakens the dollar and makes assets like Bitcoin more attractive. A clearer, more supportive regulatory framework in the US would be a huge positive.
Right, removing that uncertainty.
Exactly. And of course, continued strong inflows into those spot ETFs are key. If billions keep pouring in month after month, that provides constant buying pressure.
Any other specific potential triggers?
Well, some analysts lay out a more detailed roadmap, maybe Fed cuts starting in September. Then perhaps MiCA licensed stablecoin issuers in Europe start creating more liquidity between the euro and Bitcoin, and maybe a second wave of corporations adding Bitcoin to their balance sheets, perhaps spurred by new, clearer accounting rules or legislation in the US.
So a combination of macro factors, regulatory clarity, and continued adoption.
Pretty much. And looming further out, don't forget the next Bitcoin halving. That's expected sometime in mid-2028. That will cut the block reward again from 3.125 BTC down to about 1.56 BTC. It will further reduce Bitcoin's already low inflation rate and just keep reinforcing that core scarcity narrative over the very long term.
Mid-2028. Always another halving on the horizon. Okay, wow. We have covered a lot of ground today. We've really taken a comprehensive deep dive, haven't we? Explored Bitcoin's incredible recent price moves, the powerful forces driving them, its unique tech, those persistent challenges around regulation and energy, and the huge historical impact of the halvings.
It's definitely a complex picture. So for you listening, what stands out the most from all this information? Maybe think about how all these different forces, the big institutions jumping in via ETFs, the built-in scarcity from the code itself, those ongoing debates about energy and rules, how they all intertwine and shape Bitcoin's journey.
Yeah, it's fascinating. And maybe as a final thought to leave you with, given this dual identity Bitcoin seems to have, on one hand, it's this technically traded asset with chart patterns and cycles like the halving, but on the other, it's this global political sort of legal platypus with a truly fixed supply. How might its evolving role as digital gold really start to challenge or maybe even fundamentally reshape our traditional financial systems, maybe even our concept of money itself, the years and decades ahead? Something to ponder.